Hey everyone, welcome to Real Estate Market Update for July 2023. What we're going to do is jump into some of the numbers, the stats, and get the latest look at what is going on in the market and which way it's trending, up or down. Second bullet point there is Kit's bedroom, 2 bedrooms under 1 million. You bet. I just helped clients secure one, and so I'm going to give you a bit of a case study here, especially in negotiating a lot of money off the asking price. Third thing we're going to cover today is interest rates, which are expected to remain high. I'm going to share some thoughts, though, about that. And the fourth thing is renter bidding wars. And again, I'll share a personal example there. And finally, realtor fined $20,000 for drinking milk. So I'm just going to share a few thoughts about that news story that came across the wire. And we're going to go to the last three lines, and those are the price changes on a 1 month, 3 month, and 6 month basis. And you can see we've had some significant increases over even just the last month. Surprisingly, Burnaby South saw a further increase of 1%. New West, just a little under 2%. Further down, you'll see at the bottom, Vancouver East and West up about 1%. But it's that third column which is the most interesting. And you can see it that since January of this year, how prices have rebounded. Take a look again at Burnaby South, up 14%. And let's look again at Vancouver East and West, up 14% and 10%. So that tells you that these home prices have jumped a couple $100,000 since the beginning of the year, which is really shocking when you think about it, because what's been happening at the same time? Interest rates have been going up. Normally, we would see those numbers go down, and we did. We did see that last year at this time, but that's where we saw the rebound, right? So that's just tracing that blue line jumping back up, and that's been the story for Canadian real estate, really, especially Vancouver, the last 6 months. All right, let's continue. This is the condo update. Fairly similar story, slightly more muted. I'm just going to focus in on Vancouver East and West. Those are the two at the bottom. And you can see the numbers furthest to the right. You can see condos on the east side have been selling, are now about 7% higher than they were 6 months ago, which is in January. And condos on the west side are up 8% in the last 6 months. So if you're selling right now, you've picked the right time to do it. Moving along, a case study for you. A lot of buyers will approach me and even people in my sphere of influence and ask whether or not they can even get something under $1 million anymore in a good, desirable location. And the answer is yes, absolutely that you can. Here's an example where we secured a 2-bedroom in Kids for less than $1 million. Now, this was listed for $949,900, I believe, and so a hair under $950. This is a 2-bed and fairly updated inside, very move-in ready, as you can see from the photos. You can also see it's a corner unit, right? Because you've got windows on one side and then windows on the other side, and with a balcony. Great location in Kids Point. It really doesn't get any better than this. I mean, you're a hop skip from the beach. Shops, restaurants, cafes up on 4th, and it's a bike ride over Burrard, probably no more than 10 minutes, and you're in the downtown. So great location. Drawbacks here would be that this has a 1 bathroom and not 2 bathrooms. And the new owners here, my guys, are going to have to install a laundry. Now, when you're negotiating, you really want to pay attention to depreciation reports. And this is an example where we combed through the depreciation report. And, we got together and we even phoned the Strata president and had a discussion with them as well to learn about, major projects coming up in the building. So maybe that's sort of going the extra 10 miles, but this is really what you need to be doing as a buyer. You need to be doing this with your agent as well. It just prepares you better for future projects that can be coming down the pipe. If you're going to have to spend $20, $30, $40,000 in the future on a new roof, on new windows and so on, you want to know that. And because we knew that, we used that in our negotiation in approaching the seller, and we were able to negotiate a lot of money off of this asking price, friends. So comb through those depreciation reports and really use the information that you have in there, and write an email. Put 500, put 1,000 words together in an email. And hey, that's what we wrote those English essays for in grade 10, 11, and 12, right? So put your argument together. You can chew off a lot of money off the listing price and save that for yourself, because that's less money you need to get from the bank. So a big win there for our clients. Moving forward, some news topics. Interest rates to remain high. This is from about a week ago. Some discussion that the rates will stay high for a long time. My personal opinion is there's a lot of conflicting information about this. RBC came out with a report that said interest rates would remain high till 2025. If you were to read this news article, they're going to tell you that interest rates will start coming down March of 2024. Look, don't bet on it. Don't hang your hopes on interest rates coming down. Inflation has been very, very active. Wage inflation, people getting salary increases, which then get passed on to you and me as customers. That is very prevalent in the market today in Canada. And so I think we're going to need some time before the Bank of Canada has really wrestled inflation to the floor. And as long as they are still wrestling with it, rates will remain high. And a second point on this, and that is that I think there's a big case of recency bias that a lot of Canadians are suffering from. We're looking at the 2010s, 2013 to 2019, these 2, 3, 4% interest rates that everybody was getting for a long period of time, post Lehman Brothers going and financial crisis, right? 2009. And we keep coming back to those low rates. And like I tell my clients, don't hang your head on that, because I don't think that's the case. If you go back to the 80s, the 90s, the 70s, and even the early 2000s, rates were typically 5, 6, 7, 8, or even higher than that. So I think we're just coming back to the normal. So don't be hoping for lower rates. Now, interestingly, if you look at this screenshot, you can see that it's giving you the year on year, June on June, 2022, 2023. It's saying inflation has come back down. Now, gas prices are down 30%, so that's nice when you visit the pump. But look at interest payments on your mortgage. They're up 30%. And though that number is going to continue to tick up a little bit. Food prices up 9.1%. So it's still expensive when you're going to the grocery store. I think inflation is still here. All right, so what a year of difference makes. Okay, that's my dyslexic self. What a difference a year makes. So a year ago, and that would have been mortgage one, if you had been trying to secure an $800,000 mortgage at 4%, your monthly payment there right in the middle of the screen would have been $3,800 a month. Today at 6%, and there's a lot of fixed rates where that is the case, 6%, this very same mortgage amount now costs you upwards of $4,700 a month. So $1,000 more today than it was a year ago, 15 months ago, to get the same amount of money. So you really have to ask yourself, it hasn't become more affordable now if prices are roughly where they were a year ago and interest rates are a lot higher, which makes the which makes it all really incredible. I think it really speaks to the underlying strength and the underlying demand for housing and homes in the bigger Canadian markets like Vancouver and like Toronto, that you could have such, the Bank of Canada could hit the accelerator on interest rate increases, and prices really are not much more than 2 or 3% off where they were a year ago. Renter bidding wars. This is an article from earlier in this year, and this is the case of a lady who's looking for a home in Surrey in the suburbs and was having trouble getting one, and she was finding that she was in bidding wars to get rental properties. I will tell you that this is the case, that there's still such an extreme lack of housing options in the greater Vancouver area and in the Fraser Valley. I've put my place up for rent, and I literally in 3 days I get a tsunami in my inbox. I've got 72 people asking about it. Now they're not all serious, and a lot of those are very flippant inquiries, but there's a good 24 of those that are very legitimate. And the province later this year in October, November is going to roll out a new housing plan, so a change in density and zoning, which is supposed to get more homes on the market. So that's still going to take some time, and we'll have to wait for that in November. But if you're renting, and if you're on a low rent, and if you are able to afford a home, get into a home. I've had several clients this year where they were basically nudged and evicted by their landlords because the landlord's kid is moving in, and then all of a sudden my client goes and hits the Facebook Marketplace and finds that rents are $500 to $1,000 higher than what they're paying. So you really want to position yourself for a home ownership over the long run, especially in a big market like Vancouver, like Toronto. Rent is never going to get cheaper, okay? I've done videos on why that is, and the reason why that is the growing population, right? We're adding a city of Calgary every 3 years to our population. So position yourself for home ownership in the long run. All right, we're going to end this video off on a bit of a light-hearted note. This one came across the news wire from the Canadian press. An agent was fined $20,000 for taking a swig of milk at a seller's residence. And so this agent was caught on camera opening the fridge and drinking a milk from the carton, which is pretty stupid. Don't know why this person would have been doing that, and rightly was fined. Now, $20,000 though, I'm thinking it's getting a little bit ridiculous. I mean, that is a hefty fine. I think they could have cut that off at $1,000 or $5,000. And you reading through the article, this person said they were dehydrated, they were on medication, and so they were looking for something to drink. I'm not sure why he couldn't have just grabbed a glass if he was that thirsty, or maybe helped himself some tap water. But at the same day, I'm doing some research of past misdemeanors, and here's a former bus driver who got a 1-year driving ban for drinking and driving the bus with 36 passengers on it. I don't know about you, but I'm thinking being drunk behind the wheel where you're ferrying 36 people with you is a lot more dangerous and a much greater risk to society than someone taking a swig of milk. And this person was fined $1,000. So just interesting. That one, it's kind of got me scratching my head. $20,000 for a swig of milk, $1,000 for drinking and driving 36 people around. So I think we need to get our priorities a little more aligned in terms of fines and what's appropriate and what isn't. Folks, thanks for watching. Have a great month.